Well, welcome back to Finance Uncut. On today's episode, these four metrics will drive silver to all-time highs. And coming in from Zero Hedge, JP Morgan warns S&P fair value is 2,500 if inflation shocks do not fade away. Last week, when discussing the latest Bank of America Fund Manager survey, we pointed out that yet another paradox had emerged. On one hand, Wall Street professionals were the most overweight stock since 2013, while on the other, virtually nobody was expecting a stronger global economy in the future. An unprecedented divergence between these two data sets, the likes of which has never once been seen in survey history. And this has been my argument for some time in many of my videos, is we still have people invested in risk-on assets. Now, it looked like it had peaked and that some of the institutional investors were moving out of risk-on assets. But at the same time, we're seeing all these investors not believing in the underlying fundamentals of the economy. So, as soon as these investors, especially the institutional investors, see the and it could be anything. It could be just a couple of rate rises. It could be just following the crowd as 1, 2, 3, and then more and more people start exiting the risk-on asset plays. They need to find a home, and they're going to move into the risk-off asset plays, the safe haven assets, the gold and silver assets. And the size of the gold and silver market is, especially the silver market, is so small that we don't need to see a lot of capital flowing into this sector to see a large spike in both the gold and silver price in terms of dollars. So, once again, this is part of my overall thesis and overall play. I believe I'm about to see my second opportunity with wealth cycles. I've done a video on wealth cycles and how I was able to trade that and make that work for me. And I believe we are seeing another opportunity for me to do this again. The outcome for stocks, an S&P 500 which collapses to its fair value of 2,500 as all those inflation and GDP shocks that the market has so eagerly ignored so far turn out to be persistent and crush risk assets. Just what I've been saying on this channel for some time now. However, before anyone goes and accuses JP Morgan of being bearish, old mate emphasizes that this is a risk scenario, not a baseline view. Translation, this is what will happen. We just don't want to tell our bullish clients just yet. And I'll put a link in the description to this article. It's a really good article. There's a lot of information and a lot of data in here. So I definitely recommend you guys read it in your own time.
You know what's interesting is gold is still significant. I ask myself if it's a relic of a long history, why is there $1 trillion held in gold by the world's central banks, plus the IMF and all of the other financial institutions? If it's worthless and meaningless, why is everybody still holding it?
And coming in from Zero Hedge, silver demand from India returns to robust levels. Indian silver bullion demand is back in earnest. What will previously low silver bullion inventory levels in unsecured London warehouses shrink to now? Silver bullion bulls who pay attention to the fundamental physical drivers of the spot silver price market have been waiting for some time now for one of the world's largest silver bullion demand markets to awaken from its slumber. The nation of India, which averaged annually over 171 million ounces of silver bullion demand throughout the 2010s, has been all but gone since the hit the global economy in early 2020. With over 50 million ounces of silver bullion import demand in September and October this year, it appears Indian silver demand has returned in earnest. Recall that gold-silver bull markets, typically the so-called poor man's gold, called silver, often outperforms gold as average investors flood into the silver demand fray. Often the climbing price of gold gets so high and costly that would-be buyers switch their preference to cheaper silver bullion, buying as it offers many of the same attributes, but at a better value. And you can see here James Anderson's tweet. India has only just returned to their former silver bullion import demand level. So basically all these recent few years of record and near record silver investment demand has been Western only driven. What if India needs to catch up on supplies? Very good question. This past week, the Silver Institute made headlines by forecasting silver investment demand at 6-year high levels and climbing. Of course, they fail to mention what will happen if India keeps up its torrid last few months' silver bullion importing pace. The Silver Institute estimated this week that global silver demand would be over 1 billion ounces for this year in 2021, up over 15% since the slow hit 2020. They estimate physical silver bullion investment demand should hit around 263 million ounces this year, while India has mostly been away from the silver demand market until recently. They also note that unsecured silver exchange traded funds are forecast to see an additional 150 million ounces of silver added this year. As a result, combined holdings will have risen a dramatic 564 million ounces over the past 3 years. Again, here we are closing in on the record high level for silver ETF reached back at the start of the Wall Street silver squeeze movement in early Feb 2021. Back then, silver research firm Metals Focus admitted that the seemingly lawless city of London was almost entirely out of silver bullion float in their collective unsecured silver warehouses. With India returning in earnest to the silver bullion demand fray and the 4 major contributing factors driving silver demand the world over, it is hard not to see silver as perhaps the most asymmetric bet of this decade going forward at these historically undervalued spot price levels. And those of you that follow this channel will know that I have the same opinion. I have the same opinion. As well, gold price below 2,000 fiat Federal Reserve notes per troy ounce will prove to be a solid long-term value as the central banks use currency debasement as their main exit plans. And James Anderson had this tweet: gold also has a corrupt council and lawless city of London, interests who've helped value suppress it for decades compounding. Sleep on it if you like, but like George Soros said, gold is the final bubble of this debt super cycle.
Some of the greatest stories in the world of discovery, of innovation, of imagination have one element in common.
It sounds like this crazy idea to use such an exotic material, but this is the perfect solution.
It's used in our electronics, it's used in our medicine, it's used everywhere.
Gold is critical in space instrumentation. We need highest quality. You use gold wherever you can.
Gold is purity. Gold is sanctity.
The more I try to move away from it, the more it pulls me back.
Gold is one of the most historically important metals to humanity.
This is the story of gold.
The investment world is likely sleepwalking into a crisis of fiat currency confidence. This building phenomenon should drive heavy safe haven capital flows and momentum derivatives traders into the physical and derivative precious metals complex to come. Most investors do not know how little precious metals allocations the wealthiest hundreds of thousands of estates, so your fiat billionaires and your millionaires, have allocated to precious metals. The question is, what happens when mega wealthy estates freak out and move into hard bullion allocations? And this is my point, is we're now starting to see Indian demand come back, add in investment demand, which historically has been the driver of the precious metals fiat currency price. Throw in the industrial demand, the electrification, and the so-called green movement. You guys know what I think of that. But the demand for that moving forward. And then eventually, when institutional investors finally wake up and move into the gold and silver market, this is that asymmetric trade, especially on silver in such a small market, that I think is going to pay off hugely, both the underlying metals, but even more so the miners, and even more so on top of that is the explorers. And look, the whole macro outlook is just set up. As a value investor, these metals are undervalued on so many metrics, in particular silver. And it's why I'm so bullish silver moving forward, and why I've got those plays, in particular in the miners and explorers. Anyway, guys, what do you guys think? Love to see your thoughts and opinions in the comments below. Don't forget to hit that like button. Really do appreciate it. Take care, guys, and I'll see you again on another episode of Finance Uncut.